what would be the impact on the dollar? So if the Fed cuts rates, is that positive or negative for the dollar? There's still a lot of this idea out there that the dollar's being debased and that the dollar's going down in value. You've heard less of that lately because the dollar's been rallying again, which is not surprising. But if you start getting Fed rate cuts, historically, is that better for the dollar? What do you think?
It's the dollar in relation to every other country. Most countries have been, not counting Japan, have been cutting more than us. So we start catching up, which is kind of funny. The dollar has been getting debased. The dollar's been falling. It's down, 10, 15% this year. Our Fed has been more hawkish than the European central banks and most other central banks, China too. So it's a tough decision like everything else. I'm not sure which way Fed cuts will really cut. I think it comes back to that original argument we had about Hassett, is growth or inflation. And I think if inflation can start coming down, a lot of the fears, which will help the dollar, will go away.
Two things that will happen also too if the Fed cuts rates is that should help support the markets. That should also help kind of the economy on the margin. So stronger economy, stronger stock market, that's going to drag more foreign assets into the U.S. dollar. So it should actually wind up making the dollar stronger. Nobody wants U.S. bonds. Nobody wants to be in the dollar, et cetera. And there was actually a really, really good chart yesterday. This is the 2025 flows globally, stocks, bonds, and credit. If I'm a foreign investor and I buy U.S. stocks, I'm investing in the dollar. So everybody invested in the U.S. stock market this year. Bonds by far and away. You've got almost $500 billion worth of bond flow this year into U.S. treasuries versus kind of the rest of the credit market. So these are the problems with these narratives, is that just because something's declining in value doesn't necessarily mean it's the end of something. We have stocks go down in value doesn't mean that every company's going bankrupt now. It's just after a big rally, they're going to have a correction and you're going to get a rally again.
Well, let's talk about the bond narrative we were talking about a year ago. The bonds were about 50, 75 basis points higher in yield because the deficit was a huge problem because inflation was raging. Well, inflation has kind of stuck around the same level it was back then. The deficit hasn't gotten any better, and it's probably gotten a little worse than people thought it would be. Yields are 50 basis points lower. It's because that narrative has faded. It was never a great narrative to begin with, but it's gone. And it's the same with the debasement trade. That narrative that the dollar's going away and we're going to be using euros or Bitcoin or gold or whatever it may be, will also, it's already fading. You don't hear it nearly as much as we did a month or two ago, and that'll be gone. There'll be new narratives that take its place.
Catch me daily on The Real Investment Show. The link is in the description.